Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade today. We'll also help you really understand what could be a deeper impact of the current geopolitical risks that we are seeing. Israel-Palestine war that shocked and surprised all of us over the weekend. And what if this escalates further? Do you have to protect your money in equity markets? Is this the time to book your profits? Is this the time to stay invested? What exactly should you be doing? That is something that we will be finding out with our experts today. First up, a quick check on how the markets are doing at this point in time. Remember, there was a knee-jerk reaction that we did see in the markets. A choppiness followed through the trading session. And right now, as we speak, they're trying to pull from the lowest point of the day, 19,529, the current level of the Nifty, still about 0.6% down in trade. Let's look at the broader markets as well. Below the surface, you do see deeper cuts coming in. Several sectors of the Nifty down in the red, especially sectors like PSU banks dragging 2.7%. You also have the small caps and the mid caps down over 1% as well. So the broader markets feeling the pressure. Consumer durables, metal stocks, 1.5% of downtick each. Autos, oil and gas, all of these sectors still down in trade. Barring the IT index, rest of the sectors are down in the red. What does this really mean for you as an equity investor? Looking at the markets, especially the Nifty gainers and the losers list, the stocks that are falling the most, a lot of stocks are seeing the kind of declines that we are seeing. Adani Group stocks especially feeling the pressure. Adani Ports that closely operates in that arena is seeing a 5% dip right now. Adani Enterprises, Apollo Hospitals, Asian Paints. So you have the paint stocks, you have the tire stocks, you also have the OMC stocks feeling some kind of pressure building up right here. But time to welcome our guest on the show. Mr. Avinash Gorakshakar now joins in. He's the Director Research at Profitmart Securities. Good afternoon, sir, and thank you so much for taking the time out for this discussion. I'm sure all through the day you've been analyzing what could be the potential impact of this current geopolitical risk at hand. We already had our plate full with the kind of global risks that we were looking at before this Israel-Palestine war really kick-started. We saw, the US Fed commentary was something as an overhang. The crude oil prices were inching up. We also had several other issues. But right now, how are you looking at these fresh geopolitical concerns? And could this escalate into a bigger concern for all the equity investors at large?
Yeah, good afternoon, Sakshi. I think clearly, this was a completely unpleasant negative surprise. My sense is that, after the Russia-Ukraine war, this is another war which has broken out. And the very fact that Iran is supporting this war, the rebellion group, I think clearly indicates that, this war is not going to end very soon, Sakshi. My sense is that, crude oil prices could shoot up further because Iran is a very large player in the crude oil market. And what action US takes, what action Israel takes is now going to be center focus. And clearly, from whatever ground reports we have been getting, it clearly indicates that the escalation in the war activities has continued. So markets are definitely a little worried. I wouldn't be surprised that at least for the next couple of weeks, the markets would continue to remain volatile. And now we are entering into earnings season. So I think despite good numbers, the markets would be a little patchy, volatile. Today we saw a significant cut on the markets. I think clearly this is the single most factor which is worrying the markets now. And another thing which I would like to add is that the election schedule has been announced for Madhya Pradesh, Rajasthan. So I think it's going to be election season. So this is another factor which will keep the market a little volatile and uncertain. So I think net, investors need to be prepared for volatility. It's not that some sort of further panic sell-off could come in. But I think if at all there is a sell-off, I think they have to hold on to pretty good companies. They have to stay invested for the longer term. And I think obviously at the end of the day, in the near term, I think one could have to look at, maybe significantly large M2M losses because the markets are unlikely to get re-rated. Now, 20,000 is a far off number. Markets would like that at least the 19,000 level is defended because that is something which the markets would be closely looking at.
Okay, markets will be clearly watching out for whether the 19,000 mark gets protected on the markets if there is more downside from the current levels as well. But you rightly pointed out that, crude oil prices will be clearly something that we will all be watching out for very, very clearly. Last March, when we did see the Russia-Ukraine war break out, it was the oil prices that led to a lot of troubles brewing for global markets, that led to higher inflation, and therefore the policy tightening measures are being seen across the globe by central banks as well. How are you looking at that situation really pan out? We were all hoping that perhaps, we are near peak of the rate hike cycle, and sooner or later the rate reversal may also start. But looking at these fresh concerns, does it again push us back to the same situation, higher oil prices and therefore higher inflation, and therefore, monetary policy actions going further, and that could ultimately impact growth?
No, I think clearly, as you rightly pointed out, that higher crude prices would obviously elevate inflation levels, and I think we'll have to be mentally prepared that inflation is not going to come down quite significantly in the very near term. This is an event which is going to be very seriously looked upon because I think if Iran enters this war in an indirect manner, then I think you're going to see the US action. Israel has already stated that it's going to defend its territory at any cost. So you're going to see a lot of war extended activity in this Middle East region. So my
Hmm.
sense is that yes, macro numbers would remain a little elevated, and to that extent, I think the markets will now factor in these concerns actually, and that is probably the reason why you have seen since morning today. Both the Nifty as well as the Sensex have seen deep cuts. There's been all-round selling in large caps as well as mid caps. So I think the near-term concerns would be on the war situation. I think fundamentals, I think for the time being, would possibly take a backseat.
Okay, so what would be the ideal strategy that you would advise investors to do? Should one really stay away at this point in time, looking at at least fearing some rise in oil prices that could follow? Should one stay away from the sectors that clearly benefit from lower crude oil prices, say OMC stocks, paint stocks, tire stocks? These are the ones that are also seeing some dips today as a knee-jerk reaction. What should one do?
No, I think sectors which are dependent on crude or crude derivative products are definitely going to be impacted quite badly. Maybe not the second quarter, but at least the third quarter numbers. And I think you rightly pointed out that many companies which depend on crude, like paints, tires, carbon black, specialty chemicals, I think you could see a lot of pressure there. And we could obviously get to hear management commentaries post the Q2 numbers, which the earnings season starts very soon. My sense is that from an investment perspective, Sakshi, I think it's better to wait for the next 3, 4 days, let the market settle down, let some more clarity come in because only last week the attack in Israel happened, and today
Hmm.
we've heard that a lot of further human casualties have also happened. There's a lot of firing, so I think throughout the week it's better to wait and watch because if the market corrects, then I think it could correct quite sharply, and I think at this point of time it's very difficult to pinpoint what would be the near-term bottom. But yes, today's FI numbers also would be very important. If we get a very large FI selling number, then I think that could further, accelerate the sell-off. So I think it's better to wait and watch. No fresh buying, at least advised, at least at the current odd level. So prefer to wait and watch for some time.
So what is a safe haven, strategy that you'd advise investors to do? Hold on to some cash, maybe wait for some dips, and then if at all the dips come, then where to deploy really?
So I think, see, my guess is at least 40 to 45% of your cash should be held on to. And I think defensive sectors now come clearly into focus, like FMCG, pharma, IT. IT has already picked up, TCS is going to announce a buyback on the 11th of October. So I think markets are discounting the fact that possibly another buyback of 4,500 could come in. The company has got a lot of cash, roughly about 56, 58,000 crores. So the buyback could be about 18,000 odd crores this time. So I think, clearly IT will take a front seat here because IT is unlikely to be affected by higher crude prices. The same thing applies for pharmaceutical companies. My sense is that these could be good defensive bets. But here also, I think one has to be very selective because clearly, I think the markets would look at earnings growth trajectory at least for the next couple of quarters to ensure that stock prices remain elevated. So I think pharma and IT could be defensive bets, and of course FMCG also, which clearly partly could be impacted by the crude oil price. I think a better position compared to other cyclical sectors present in the market.
Okay, so what would you say about the alternate asset classes at this point in time? Is it also wise enough to start deploying more funds to maybe gold and real estate, gold, silver, real estate, these kind of pockets as well? Because they've always, relatively done better in situations of geopolitical uncertainties.
No, I think gold could be a good defensive bet, but I think other commodities like silver, or for that reason other metal commodities have seen drastic falls. So I think there also the volatility has been quite significant. Gold is a good asset class to hedge your losses, and I think
Hmm.
gold in the very near term could see a little bit of elevation, considering
Hmm.
the fact that during uncertain times, normally gold as an asset class is a very good defensive bet. So I would believe that yes, if somebody has the liquidity and has no exposure to gold as of now, some part of your allocation can be allocated to gold. And I think clearly, on the debt side also, Sakshi, one could look at debt mutual funds, because with
Okay.
interest rates going to be elevated, you're going to see better, higher bond yields. So that indirectly will help all these bond funds to give better kind of returns compared to equity, at least in the near term.
Okay, so since we are talking also about the earnings season to kickstart, how would you be really positioned on the IT majors right ahead? Because TCS, Infosys, and the like will start reporting their numbers this week itself. What is your expectation of the overall earnings season this time?
No, I think my guess is the headwinds still continue to be quite challenging. I think both from the US and the European market. But I think, companies which have got a large order book and clearly visibility, I think companies like TCS, HCL Technologies, Infosys, I would believe that, these companies could continue to show steady performances. I think the key number to watch out this time would be obviously the new kind of order count plus the margin kind of commentary from these managements. And
Mm-hmm.
obviously, the delinquencies, as far as their employees are concerned. So I think my sense is that maybe after December, you could see a proper tailwind coming in from the IT companies. The September quarter is going to be a moderately soft quarter. So we are keeping hopes that possibly the second half of this financial year will be better. So I would believe that the commentary and the message sent out by the top management post the Q2 numbers will be very important, because now clearly my sense is that US market and the European market, possibly some tailwinds are emerging. So probably from October, November onwards, we are positive that the markets could possibly re-rate all these companies. So I think good time to accumulate good quality large cap stock. But yes, you need to keep a time horizon of at least 6 to 12 months.
Okay, fair enough. Let me ask you about some of the other pockets that are feeling the pinch and heat of the Israel-Palestine war crisis and the dip that we are seeing in the markets. The Adani Group stocks have slipped a lot, especially Adani Ports that has, some operations going in that area has seen a 5% dip. How would you be advising investors to really view this space?
No, I think Adani Ports has got a port in Israel, and I think it's a big acquisition for them. My sense is, at least in the very near term, Sakshi, the stock will underperform, because this war is not going to end in a hurry. So till the next couple of months, I think the markets will be worried as to when the economic situation and the when normalcy comes back here. It's very
Hmm.
difficult to see, but typically after the minor kind of issue where they had to write off their investment, markets are little worried that in case they have to write off even the Israel port investment, that would be a big loss to the company. So I think currently shareholders can hold, but I think fresh buying is not advised. You could see a lot of volatility more as and more news flows coming.
Okay, I think the only bright spot today is the IT space, like you were pointing out, and of course that is led by the move in TCS right ahead of the buyback announcement right there as well. But even in the previous buybacks, I wanted to understand from you, how are you looking at this buyback, especially for TCS? And this is because even in the previous buyback when they had announced, the price of 4,500 has still not been reached. What would your thoughts be this time around, and how should investors be viewing this opportunity?
So I think my guess is, Sakshi, the buyback, offer which is going to be made on 11th of October is more like a sentimental booster. See, the
Hmm.
markets will be happy if the core earnings, visibility increases quite significantly. So the buyback will give a temporary sentimental booster to the stock based on what the buyback price is. But a significant amount of re-rating could for TCS could come in only if the management is sounding extremely positive on the tailwinds emerging from the global markets. As of now, it doesn't seem that US and Europe is going to give them that extra booster. So I think the sentimental booster will be there. After that, the stock will again remain range bound. And my sense is that TCS is a cash generating machine. For them to announce a buyback is nothing great. What the market would like is earnings visibility and strong order wins, which I think still seem to be quite far away.
Okay, got that. Well, many thanks, Mr. Gorakshakar, then for being with us on this edition and explaining to us the impact of what the Israel-Palestine war could be on global markets and on Indian markets, and how should investors be really prepared for the upcoming volatility, and where exactly can really one look for safe haven opportunities still emerging in the markets right here. Always a pleasure having you with us on Business Today Television, sir. Thank you so much for taking the time out. Meanwhile, markets slipping away again. 140 points lower in trade back. So you are seeing them slip towards the lower point of the day. 19,510 is the level at which the Nifty is trading at. Now, when we talk about the other broader market indices, of course, all of the sectors have now slipped into the red. And the IT space is also now seeing slight dips coming in. It's below the flat line now, led by sharp declines coming in on PSU banks, 3% of a fall for this month. Small caps, mid caps, and apart from this, metals and consumer durables are clearly facing the heat at this point in time. But we'll continue to explain to you what exactly should your focus be amid the fresh geopolitical risks right here. No need for panic at this point in time, but the wise strategy could be that you should continue with your SIPs and of course hold on to your good quality stocks in your portfolio at this point in time, and wait and watch till the situation really pans out. And we'll continue to get you expert views on all of that going forward as well. Until then, many thanks for tuning in. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms like Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.